Is the electric vehicle revolution, the one that was supposed to forever change our way of driving, already collapsing? You remember just a few years ago, everyone predicted that electric cars would dominate the market. And now, well, the numbers are telling us a different story. Take Germany, for example. As Europe's largest car market, electric car sales have fallen by 18% in the first half of 2024. And it's not an isolated case. In California, despite being the cradle of electric cars, Tesla also sees its sales plummet by almost 25%. Electric cars appear to be losing momentum. Is this a temporary setback or the end of a revolution? Today, we'll explore the reasons behind the slowdown in the electric vehicle revolution that was expected to transform our daily lives. And as you'll see, it's far from being as simple as everyone imagined. Let's start with the numbers. And believe me, they're more revealing than they seem at first glance. In 2024, about 7 million electric vehicles were sold worldwide in the first 6 months. That sounds super impressive, but behind that number lies a much more complex reality. If we zoom in on Europe, we notice that the growth is only 1%. In other words, it's practically stagnant. Despite extremely optimistic forecasts predicting a sales boom in this region, the low growth is actually a warning signal. In 2023, Germany, Europe's largest car market, was the leader in electric vehicle sales. Successive governments there have pumped billions in incentives to promote the transition to cleaner mobility. But in 2024, electric vehicle sales fell by 18% in just 6 months. That's huge. Why such a setback in a market that seems so promising? The answer is simple: the withdrawal of some subsidies. In Germany, government aids that encouraged consumers to buy electric vehicles were reduced or removed, and sales plunged. The market collapsed without financial support, raising a crucial question. Was the electric revolution driven by genuine consumer demand or primarily by financial incentives? Were buyers rushing to electric vehicles out of conviction or because subsidies made them more accessible? The case of Germany suggests that without these incentives, many buyers opt for alternatives like hybrid or thermal vehicles. Let's now move on to France. The situation here is different, but the scenario may become similar soon. The conversion bonus, which allows you to receive up to 5,000 euros for getting rid of a polluting vehicle and buying a greener car, is threatened. The French government is considering drastically reducing or canceling the budget for this aid in 2025. And it would be a huge blow to sales, as a large portion of buyers rely on this bonus to make the purchase of a more eco-friendly vehicle affordable. Cutting this aid may trigger a domino effect on sales, similar to what happened in Germany. Even in Italy and the UK, where sales are still driven by relatively strong government incentives, we are starting to see signs of a slowdown. As soon as the aids decrease, sales plunge. In June 2024, Italy set a record for electric vehicle sales due to a highly popular incentive plan. However, this is misleading since the program's funds were depleted within hours. And now, electric vehicle sales are down 11% compared to the previous year. Further proof that without public money, the market no longer follows. In the United States, electric vehicle sales have risen by 10% during the same period, a different trend compared to other regions. That seems encouraging, but once again, focus on the details. This statistic includes both fully electric vehicles and plug-in hybrids. In fact, much of this growth is due to a 28% increase in hybrid sales. In other words, Americans prefer hybrids over fully committing to 100% electric vehicles. You wonder why? Because hybrids offer a flexibility that electric vehicles do not yet have. Hybrids are ideal for long journeys without the worry of finding charging stations. The rise in energy prices has further increased interest in these vehicles. China is the world's largest electric vehicle market. Sales have increased by 30% in the first half of 2024, suggesting things are going well. However, digging deeper reveals that in China, 60% of electric vehicle sales are actually plug-in hybrids. Even in this massive market, hybrids are driving growth, not fully electric vehicles. The vision of a complete shift to electric vehicles remains distant, even in the most vibrant markets. The first obstacle is probably the most often cited by consumers. It's the charging infrastructure. For many, the transition to an electric vehicle seems ideal until they are faced with the reality. Imagine being stranded on the highway at night with a nearly empty car battery and no nearby charging station. It's a nightmare that frightens many drivers and gives them pause. Even in areas expected to have better coverage, such as California or Germany, the readiness to buy an electric vehicle is far from ideal. In California, for example, The lack of available terminals and long queues at fast charging stations make the use of electric vehicles frustrating for many drivers. In some European countries, this problem is even more acute. In Italy, electric vehicle demand is high, but the infrastructure is struggling to keep up, with terminals often broken or inaccessible. The case of ENGIE and its subsidiary EVBox starkly illustrates the industry's challenges. EVBox, a charging station company, was liquidated in 2024 after losing over $800 million. This industrial fiasco shows how difficult it is to develop a reliable and profitable infrastructure. Despite numerous charging points, maintaining them is challenging, especially as interest in electric vehicles appears to be declining. The dream of electric mobility becomes a nightmare when infrastructure lags behind, making electric vehicles impractical for many due to the lack of charging points. Imagine having to plan your route each time based on the available charging stations without being sure they will work. It's inconceivable for many drivers, especially those in rural areas or who often take long trips. Secondly, as you may expect, electric vehicles remain extremely costly to purchase. I mentioned it in the video about Volkswagen's stock price drop, which is linked in the description. The cost to recharge an electric car at home is usually lower than refilling a fuel tank, but electric cars have a much higher purchase price than gasoline cars. In the US, in 2024, electric cars cost an average of $57,000, while gasoline cars cost around $27,000. The difference amounts to over $30,000. France has a similar gap. Even if the conversion bonus were to reduce this gap, it is currently at risk. The €5,000 aid, enabling many households to switch to greener vehicles, may soon vanish, as discussed earlier. Without it, many motorists may not afford switching to electric. Despite subsidies, electric vehicles are still unaffordable for many people. For those who wish to do something for the planet while keeping their wallet in mind, hybrid vehicles seem to be a more reasonable compromise. Hybrids allow for some electric autonomy while maintaining the reliability and convenience of a gasoline engine for long journeys. In fact, hybrid sales are skyrocketing, as seen in the US with a 28% jump in 2024. Another significant concern with electric vehicles is their resale value. If you buy a car, you generally hope to be able to resell it in a few years without losing too much value. Well, with electric vehicles, it's the exact opposite. Most lose between 25 and 30% of their value in just 1 year, according to a study by CarWow that you can find in the description. According to CarWow, the Audi e-tron lost 27% of its value in 2024 compared to the previous year. By comparison, an Audi A7 diesel only lost 2.7% of its value over the same period. In other words, buying an electric car is like buying a laptop or a smartphone. You know in advance that it will quickly lose value. If you're wondering why, it's pretty simple. It's mainly due to the quickly advancing battery tech and concerns about wear and tear on these batteries. Buyers are hesitant to buy a used car whose battery may soon need replacement, which is extremely costly. As a result, a lot of consumers hesitate. Why buy a car if you know it's going to lose a significant part of its value in the first year? Furthermore, some prospective buyers still have the question of battery life in mind. Although they should last years, uncertainty about their long-term reliability is still a hindrance. Finally, there's a psychological factor we can't ignore. It's the fear of the unknown. Electric vehicles are still a relatively new technology for many people, despite being available for some time. Battery fires are one of the most common fears. Despite statistics showing electric vehicles are no more prone to catching fire than gasoline cars, images of electric cars engulfed in hard-to-control flames have impacted public perception. Electric vehicle maintenance and repairs are often seen as more complex, with technologies that few traditional garages have mastered. Economic uncertainties and other factors lead many potential buyers to stay in their comfort zone, opting for gasoline or hybrid vehicles over electric ones. One of the main drivers of electric vehicle adoption has always been government subsidies. Conversion premiums, ecological bonuses, and tax credits have enabled many consumers to make the switch. However, future support is uncertain. As discussed earlier, France's conversion bonus faces serious threats. In 2025, the government plans to reduce the budget for greening the car fleet by $500 million. This budgetary cut risks directly affecting this aid, which is nevertheless essential to encourage motorists to turn to more ecological vehicles. Without this bonus of up to Euro 5,000, many households won't be able to afford switching to an electric or hybrid vehicle. This poses a crucial question. The electric vehicle market's survival is in question without substantial subsidies. To make matters worse, France's 2025 finance bill aims to increase the environmental penalty on CO 2025 emissions, potentially making non-electric or hybrid cars even more expensive to buy. This will likely penalize many households that cannot afford to switch to electric, leading to increasingly difficult financial situations for them. Amidst the political uncertainty, car manufacturers face a challenging predicament. For years, automakers like Volvo, Ford, and GM have pledged to transition to fully electric vehicle production. Volvo had pledged to exclusively sell electric vehicles by 2030. However, as soon as 2024, this commitment is already uncertain. Why? Simply because consumer demand is not as strong as they hoped, and the government incentives that were supposed to facilitate this transition are beginning to disappear. And it's the same for Ford. In the United States, the brand had announced massive investments to produce 100% electric vehicles, but faced with the reality of the market and consumer preferences, they have already lowered their ambitions. Ford realized that for electric vehicles, larger sizes require bigger batteries, which increases costs, unlike combustion vehicles. Ford's chief executive officer, Jim Farley, admitted that large electric vehicles were not profitable. That explains why Ford redirected some investments towards hybrids and even thermal vehicles. The dilemma for manufacturers is therefore clear. Car makers face a dilemma: continue investing heavily in electric vehicles, hoping for demand growth and sustained government subsidies, or step back and bet on alternatives like hybrids that provide a smoother consumer transition. Increasingly, brands are opting for the latter approach. If these subsidies vanish, it might trigger a domino effect on electric vehicle sales in the entire production chain. Manufacturers, having invested billions in battery and vehicle production, face difficulties with underutilized factories and production lines. Even Tesla, the leader in this revolution, is starting to revise its plans. In 2024, the company delayed building its New Mexico factory and scrapped plans to expand in India. Even Elon Musk, a strong advocate of electric vehicles, appears to recognize that the market has become less stable and predictable compared to recent years. Tesla has started transitioning to fully autonomous vehicles with the robot taxi to anticipate the future. In my view, we mustn't underestimate the political side of this transition. Electric vehicles have become a symbol of the fight against climate change, especially in Europe. They are often perceived as luxury products, reserved for urban elites, which creates a social and political bill. In the US, some people disapprove of subsidies given to buyers of high-end electric vehicles like Teslas. Many people believe that these subsidies mainly benefit the rich, while the middle and working classes continue to drive gasoline cars due to lack of resources. This polarization further complicates the sensitive issue of electric vehicles for governments. How can we keep promoting electric vehicles as a symbol of the fight against climate change while making them accessible to everyone? The answer to this crucial question will shape the future of EVs. The electric vehicle revolution isn't dead yet, but it's evident that we're far from meeting the initial expectations. Hybrids are gaining popularity while doubts about fully electric cars continue to increase. What is certain is that the next few years will be decisive for the future of the automotive industry. The solution may lie in combining technologies, with hybrids playing a major short-term role. What's your opinion? Are hybrid cars a temporary fix, or do you believe in an all-electric future? Volkswagen is one brand that's been greatly affected by everything discussed in the video shown.